Namaste and welcome back to India Market Watch, the deep dive where market insights meet real world decisions. I'm Ananya Verma.
And I'm Aarav Sinha. This is where we unpack the key financial insights you care about without drowning you in jargon. Efficient, insightful, and maybe even a little fun.
Today's episode all about growing wealth smartly. Two pillars. First, protecting your online finances. Then, exploring investment strategies in India and the US.
We've gathered insights from official fraud prevention materials and done a deep market analysis ourselves. So let's kick off with the basics your online financial safety.
Let's face it, online banking is super convenient.
But also a target for cyber criminals. That convenience can open doors if you're not cautious.
Rule number one, your bank will never call or email asking for sensitive details. No passwords, no OTPs, no CVV numbers.
If someone does, huge red flag. Hang up. Report it.
And your passwords? Make them strong. Mix uppercase, lowercase, symbols, numbers. No password 123.
Also, change them regularly. Annoying? Sure. But critical.
On public or shared computers, use virtual keyboards. Protects against keyloggers.
And avoid public Wi Fi for financial transactions. It's just not worth the risk.
A few other security habits. Always log out completely after banking, not just close the tab.
And clear your browser's history and cookies, especially if you've accessed sensitive info.
Watch for that little padlock in the address bar. And always use sites that start with HTTPS.
Never click on banking links in emails. Type the URL manually. And save your bank's official number. It's your lifeline if something goes wrong.
For physical safety, shield your PIN entry at ATMs. Don't let your card leave your site at restaurants or shops.
And when you get a new card, change the PIN immediately. Check the envelope for tampering.
At ATMs, stay aware. Take your card and receipt every time.
Mobile banking's great, but keep your OS and antivirus updated. And register your number for alerts. Spotting fraud fast is key.
Scammers may call claiming there's an emergency. Always verify through independent sources before reacting.
And if someone's offering unrealistic returns, it's probably a scam. Stay skeptical.
A couple more tips. Only enable international card use when traveling. Download e-wallets only from the Play Store or App Store.
And avoid saving card details in apps if you can. Better safe than sorry.
Don't use autofill on forms, type manually. Safer from hidden scripts.
Stick to trusted e commerce sites. Be cautious with browser extensions.
And if something does go wrong, report it on India's official cybercrime portal, cybercrime.gov.in.
Okay, so we've built our financial defense. Let's switch gears to wealth building, investing smartly.
Aarav and I have been digging into market trends in India and the US, and here's what we found.
First, the concept of asymmetric opportunities. These are investments where the potential upside outweighs the downside.
It's about smart diversification, not betting everything on one market or one stock.
Since 2019, both the Nasdaq and India's Nifty 50 have grown, but there's a twist.
The Indian rupee has depreciated against the US dollar. So, in dollar terms, US tech outperformed.
Currency matters. It changes the real return when investing across borders.
Now, let's talk about India's edge. We are seeing a shift from an unorganized economy to a more structured, formal one.
Think small family shops giving way to organized retail, digital first services like Septo, Swiggy.
That transition opens up huge opportunities in mid cap and small cap companies, those poised to grow as India formalize.
Contrast that with the US, which is already formalized and dominated by big tech.
In India, the growth might be more grassroots. In the US, it's more top heavy. Think Google, Amazon, Meta.
We also compared price to earnings, PE, ratios. Many Indian large caps are expensive right now.
Stocks like Adani Enterprises are trading at high multiples. If they don't deliver on growth, expect corrections.
So, understand the valuation. High PE is okay if the company can deliver strong earnings growth.
We looked at portfolio themes too. One strategy, buy and forget, works well with US giants like Alphabet or Nvidia.
But maybe not so much with Indian large caps. Why?
Because they're more prone to disruption. Take Starlink. If it enters India, it could shake up telecom majors.
In India, mid and small caps may be better long term bets. They're the future blue tips.
Internationally, we are seeing potential in Latin America. Mercado Libre, Nubank, those are fast growing fintech and e commerce players.
Cutting edge tech, CRISPR, data centers, big opportunities, but India doesn't have many listed options yet.
In contrast, Indian healthcare and insurance sectors are still developing. Lots of room for growth.
Like Max Healthcare, it's done well and the sector has tailwinds.
The key takeaway, use different strategies for different markets. US large tech, long term hold. Indian mid caps, high growth potential. Indian large caps, maybe trade actively.
One size doesn't fit all. And learning trading, or at least understanding how markets move, is essential.
So here's our final thought for you. What's your strategy? How will you balance security with growth in this fast changing world?
Are you protecting what you've earned and planting seeds for future wealth?
Thanks for joining us on the deep dive. Don't forget to subscribe to India Market Watch. Hit the bell so you don't miss out.
And share this episode with someone who needs a smarter financial strategy. See you next time.